Welcome to the Trading Bell, and we are right here to discuss matters to do with the market, and we want to center into the derivatives market. And joining us is Justus Ogalo, who is the manager derivatives market right here at the NSE. And he's going to tell us what is this new thing they have launched. So stay tuned as we get started. Justus, welcome to the show.
Thank you very much for having me again.
Great. It's good to have you here. And I must start by, first of all, congratulating you for hosting the entire Africa here. I saw you having a great conference, and we had a conversation with Chris. But I wanted to ask you from the Kenyan point of view, what would you say was your key takeout?
Yeah, so hosting the Association of Futures Markets was very exciting for us as the Nairobi Securities Exchange. It brought together different exchanges and players within the derivatives markets across the world to visit Nairobi and see what Nairobi has to offer. We got a lot of insights about how derivatives markets work in other jurisdictions, in other markets. And we also learned that there's a lot that we are doing right, and other countries are actually looking at us as a benchmark of sorts, and see how they can develop their own markets.
Oh, that's good. What would you say, in your own perspective, is the state of the derivatives market since the launch? I know we are still young to where we are. What are your observations so far?
So it's been a long journey. We've had our derivatives markets for just about 6 years. And it has been a very long growth curve. What we have seen is the appetite for these derivative products amongst retail investors, who have been our most active customer segment. We've also seen a lot of appetite from institutional investors, such as our collective investment schemes, specialized funds, and pension schemes to grow and to participate in this market and benefit from what derivatives do have to offer.
All right, I think that's fair enough. And would you say, and I like the fact that you've mentioned the word appetite there, that there's a bit of it all. Would you say, fact or myth? It's your option. I mean, I'm just throwing it to you. Derivatives are still a hard topic for many. Is it a fact or a myth?
It is a bit of a fact. They're not as simple, mainly to understand. But once you get an understanding and a feel for how they work, then they can be quite simple to use. They offer a lot of benefits to investors in different aspects. And what we're doing as the exchange is creating a lot of awareness about how these products work and how they can be safely incorporated to investor portfolios.
Okay, lovely. And we certainly hope that our viewers, investors, potential investors as well, will take up the challenge, go check out what are these all about, what can you do, and there are many advantages. And by the way, for more information, you can check on our channel and see some of the conversations we've had about derivatives, the advantages, and what you can do about it. So fair enough, Justus. And you have launched a new product in the market. You're calling it options. As I say, from where I sit, it looks like it's a simple one. It's either an option of this glass or this one. Is it that simple? Maybe you can help us understand.
Yes, it actually is, with a small layer of complexity. But the option basically allows the buyer of that contract the right but not obligation to purchase or sell the underlying security. What that means is that investors should be able to set up a target price for a share that they want to purchase, get into the options contract, and really just wait for their target price to be achieved. Then they can earn from that. It allows for two-way market. So if you are looking to buy a security at a certain target price or sell at a certain target price, then you can be able to achieve that simply with the click of a button.
You can see my face. Maybe that's the face of many other investors. So I want to understand from a very basic point of view, because you have explained to us before about derivatives and how you brought options. Is there a difference? And then on a very basic way, how else can you explain to us the options? Because we want to invest in it. Go ahead.
So options really got their start through trading in commodities. And how it used to work, and we are talking a very, very long time ago, is that merchants would go around buying crops from farmers, and if certain scenarios, or rather they would get into agreements with these different farmers, such that if the prices in the market were higher than what the farmers were offering, then they would buy from the farmers and then sell to the market, sell to the marketplace, and vice versa. So looking at that from that sort of simpler point of view, then we've seen that they've evolved to now accommodate different financial instruments, coming down to shares. We still have commodities. We have interest rates that can be traded. Currencies can also be traded using this options mechanism. So basically, if your target price hasn't been achieved as the buyer of the option, then you're not obligated to buy. And because of that, then there is a small cost element where the buyer of this option would be required to pay a premium to the seller of the option, which then creates an incentive for the option sellers.
Okay. You know, I sit on the seat of an investor who's looking at you and saying, okay, I get it. But can they get help? If they walk to their brokerages or they walk to their advisors in the investments, can they help them at least walk through this?
So we as the exchange have empowered our stockbrokers and investment banks to offer these option services. To get started, you need to open a trading account with your stockbroker and investment bank, and they would provide you with access to the trading platforms and advice on how to effectively execute your investment strategy. We've also created quite a lot of information on our website that you'd be able to get a good understanding of how these products work.
Okay. I have a follow-up on that, because for me, investor education is everything.
Yes.
I mean, the success of these products, I'm sure you can credit to the fact that if people understand it, they will buy it.
Yes.
So my ask is, are you planning as the NSE to at least do awareness about this, some webinars, things like that, so that at least investors can easily jump in?
Yes. So we are and have undertaken quite a lot of investor education activities. We, as I mentioned, we have quite a bit of content already on our website, on our social media platforms. We are engaged with different intermediaries within the education space. We engage with a lot of universities and professional learning centers to provide that information to the public. You can also reach us through any of our social media platforms, and we will be able to engage.
All right. You know, I'm asking this based on the fact that we also had a conversation with the CEO. NSE has a new strategy. So I wanted to ask, in the context of the new strategies, is part of the conversation, and also part two of that is, who's the target for these particular products that you have? Because I've heard you mention a little bit of universities. Is it for young people only, or what is it? But go ahead.
Yeah. So the product really caters to all investor needs at different levels. We do have retail investors who have already been active in our futures products, who are actually keen on trading the options because they are familiar with how they work, even at a global scale. We do have institutions such as our pensions that are keen on managing the risks that they already have in their portfolios. We do have specialized funds that have already shown a keen interest in being able to invest in these products that they already do globally, but we have empowered them to do that locally. So depending on what your investment vehicle is, then there is an opportunity for everyone. Together also with our local investment banks, have an opportunity to now structure a very wide array of products that leverage on options trading to be able to cater to different investor needs. So for retail investors who may not want to trade directly, they can be able to access or rather gain exposure to these products through the different funds in the market. And we also accommodate all retail investors to access the platforms through their preferred broker or investment bank.
Fair enough. And I would want to call this an intro, because I want to end the conversation by really putting you on the spot, by asking you what we can do together to ensure that our investors really get to understand this fully. But in a nutshell, when we talked about derivatives with you, it was very clear the advantages were there in terms of actually hedging on someone's fans in terms of really taking advantage so that your risk portfolio is not so much exposed and all that. And I wanted to ask you, when it comes to options, what would you say are the advantages?
So the advantages are actually significantly more with options compared to futures.
Okay.
Futures have a very high risk profile, whereas options, for the buyers of the options, the largest amount you can possibly lose is the premium that you've paid up front on the contract, which is very marginal compared to what you're actually getting.
Okay.
So in principle, the options are to a large extent principal protected, where you don't have to worry about losing in a volatile market. In a safe market, you can actually engage in different investment strategies that allow you to just benefit from a sort of stagnant market. In a volatile environment, then as the derivatives, we always say volatile markets are our best friend.
Yeah.
But the options allow you to also benefit from that with a reduced level of risk compared to owning shares or trading on the futures. So they have quite a very high level of risk protection.
Okay. So globally, because you sit at a place where you're also observing what other exchanges are doing, where has this really worked and been well embraced?
So options are actually one of the most traded asset classes there are globally. So it's seen a lot of success in different markets.
Okay.
Primarily in the Asian markets that actually do have a lot of integration of retail investors into their market. So the appetite for options has been quite significant globally. And we know we can be able to replicate the same.
Okay. Finally, Justus, thank you so much for that explanation. But I want to put you on the spot. I would like you to put up a webinar for our investors to come in and be able to give us feedback and ask step-by-step questions on how to trade into that. Can that be a promise?
Definitely that can happen.
Okay.
We look forward to supporting it and engaging with you.
All right, they have it. And I'll keep you on toes on that. So for you, our investors, potential investors, if you want to understand it even more, make sure to tune in to that webinar. We'll make the announcements on all Nairobi Securities Exchange handles, Trading Bell handles as well, so that at least you get to understand and even ask questions, so that at least you can get to know how do you trade on these options. Thank you so much for your time. Let's move on to our next part of the conversation.